The year 2025 is shaping up to be a global economic turning point, with a crisis that could have effects as devastating, or even worse, than those experienced in 2008. The factors contributing to this situation have been brewing for years, fueled by questionable political decisions, overheated financial markets, and a global system reliant on debt and excessive consumption. Global economic growth, once driven by trade expansion and technological advances, is now hindered by geopolitical tensions, persistent inflation, and structural problems in some of the world's largest economies. Global debt, both from governments and corporations, has reached unprecedented levels. According to recent data, total debt exceeds $300 trillion, which is more than 3 times the world's gross domestic product, GDP. This debt bubble is on the verge of bursting, and when it does, the consequences will be devastating. In China, the economy is experiencing a concerning slowdown. The real estate sector, which accounts for a significant portion of its economic growth, is on the brink of collapse, with major developers facing defaults and a decline in housing demand. This has triggered a domino effect, impacting not only the domestic economy but also countries that depend on China as a driver of exports and consumption. Despite the Chinese government's efforts to stimulate growth through interest rate cuts and fiscal measures, the results have been insufficient to reverse the trend. Meanwhile, the United States, the world's largest economy, faces a combination of critical issues. The Federal Reserve has raised interest rates to combat inflation, but this has increased the cost of debt for households and businesses. The U.S. real estate sector is already showing signs of weakness, with a drop in home sales and a rise in evictions. Additionally, economic inequality is reaching alarming levels, with the middle class eroding and millions of families falling below the poverty line. In Europe, the situation is no more encouraging. The war in Ukraine and energy tensions with Russia have exacerbated economic problems. Energy prices remain volatile, affecting key industries and raising the cost of living. Governments have attempted to implement subsidies and aid, but these efforts are depleting fiscal resources, leaving many nations vulnerable to the upcoming recession. Globally, supply chains are under pressure due to a combination of logistical issues and declining trade activity. Transportation costs have risen again, and shortages of raw materials are impacting production in critical sectors such as technology, construction, and automotive. Financial markets, which have long been sustained by expansionary monetary policies and fiscal stimulus, now face a harsh reality. Excessive valuations in technology stocks, real estate, and cryptocurrencies have begun to adjust, leading to massive wealth losses for investors. Additionally, trust in financial institutions is declining, especially among younger generations, who are seeking alternatives in decentralized economies like cryptocurrencies, despite their associated risks. Although the outlook is grim, there are opportunities for those who are prepared. During past crises, investors with foresight managed to protect and grow their wealth. Safe haven assets like gold and silver, along with investments in resilient sectors such as renewable energy and technology, could offer protection against volatility. However, for most people, the focus should be on strengthening their personal finances. This includes reducing debt, building emergency savings, and diversifying income sources. The year 2025 will not only be a year of economic challenges but also a period of redefinition for the global financial system. The decisions made now, both individually and collectively, will determine the course of the coming decades. In the face of this perfect storm, preparation will be the best tool to confront it.